Good morning and welcome to today's session, Ask Me Anything. Today's topic is going to be about S Corporation compliance. My name is Tony Hogan. I am the founder of Regen Personal Finance. I am a tax advisor and financial strategist. Last week's topic was on S corporations and LLCs. I had some technical challenges, so I didn't get to go live, but I did make a video about that, and you can find that video on my profile in my post. It will be there, and if you have any questions about that topic, you can drop them in the comments or send me a message. This week's topic was supposed to be about the beneficial ownership information reporting, but the day that I posted the event, a Texas federal court issued an injunction to temporarily put a hold on or temporarily block that requirement for BOI reporting. So I had to change the topic to the topic that we'll be discussing this week. And I will continue to update you. I'll do a post if there are any updates, anything changes. It looks like the government is challenging that they are appealing that injunction. So it's kind of up in the air now, and we'll just have to see what happens. Unless something has happened today that I haven't seen yet, or yesterday evening. So if you have any questions about today's topic, you can drop them in the comments. I just wanted to start with a brief overview, just so that you do have some information to go with, and it may be the basis of any questions that you might have. So why are we talking about S Corp compliance today? Because a lot of tax preparers, professionals will recommend clients or business owners to elect to be taxed as an S corporation. And for many of them, it may not be a good idea for them to do it at the stage that it's being recommended. And then once they do make that S Corp election, there are some things that need to be done in order for you to be compliant. So we want to talk about that. And basically, that compliance helps you to avoid any IRS penalties. It protects the corporate veil so that, which is very important. And I talk about that in the S Corp LLC video. And then you want to make sure that you're maintaining your tax advantages, because if you do anything that could potentially or that's out of compliance, it could potentially, like I said, break that corporate veil, and many of your deductions that you have used could be disallowed, as corporation election could be revoked. So you don't want to do that. So we want to talk about the things that you need to do to make sure that you're maintaining that corporate veil, and then some other things that should happen once you make that election to be taxed as an S corporation. And these are things that you should know just as a business owner in general. As far as protecting the corporate veil, you want to make sure that you are keeping your business and personal finances separate, especially once you make that S Corp election. You want to be, and even when you have an LLC, you want to make sure that you are treating that business like a business. Because when it comes to your liability and limiting your liability, if it looks like you are commingling, you're using that business account as your personal account, then you can put your business at risk for, again, having your deductions disallowed, having your S corporation election revoked, and you could be subject to fines and penalties. So you want to make sure that you're keeping your finances separate. So have separate bank accounts, separate credit cards. Anytime that you need money personally from the business, you need to make sure that it's done right. As an S corporation, you're either going to be do that through payroll or through a distribution. So you want to make sure that as an S corporation, you as the primary shareholder are paying yourself a salary. You are essentially a W 2 employee. And so you want to make sure that you're paying yourself a reasonable salary. And there are several things that you can look at to make sure that you are paying yourself or to calculate what that salary is. So you want to make sure that you are make sure that you're doing that. And then if you have made any loans, any shareholder loans, or any loans between you and the company, you want to make sure that those are documented with a loan agreement. You want to make sure it has an interest rate, stated interest rate. If it does not have an interest rate, it could be imputed by the IRS, and you'd be responsible for paying or for any penalties or fines related to that. You can typically get the interest rate from the IRS website if you are going to be, if you need to do that for your loan agreement, and then make sure that any repayments are actually happening. One of the things that I don't hear talked about a lot when it comes to S corporations and even LLCs is making sure that you are holding your required board meetings and you're documenting them. So, one of the advantages of putting together your board of advisors or your board of directors is that when you have meetings, depending on where and how you have those meetings, that's another tax deduction for you. So if your family, friends, acquaintances, other professionals that you work with are associated with have a board and you have an annual board meeting, quarterly board meetings, you can have those at different locations. And any travel costs, food costs, anything related to those meetings are going to be tax deductible. You want to make sure that you are documenting the business purpose. And then in those meetings, you want to make sure that you have an agenda and that you are keeping minutes, keeping notes of exactly what is discussed in that board meeting. This is one of the key elements in protecting the corporate veil because you're treating that business like a business. And I do have a video on the family board meeting. So if you want that, you can send me a message or drop a comment and I'll send that to you. Make sure that you get that video. I've mentioned reasonable compensation. There are really no IRS guidelines on what is considered reasonable. Again, there are a few different ways that your tax professional or your accountant will help you to determine what that reasonable salary is. And so I won't go into that. I may do a different session on that. But you want to make sure that you're not underpaying yourself. It has to be reasonable for the work that you are doing. If you have a successful business, you're making good money. You don't want to pay yourself a salary of $5,000, $10,000. You want to look at several factors, industry, the work that you're doing, and make sure that you are paying yourself a reasonable salary. Tax filings, tax deadlines once you make the election to be taxed as an S corporation, you are going to use Form 1120S to file that tax return, and it is due on March 15th instead of April 15th. If you file an extension, that tax return is going to be due on September 15th. You want to file your business tax return before you file your personal tax return, because you'll have a K-1 issued from that business tax return that you are going to need to report on your individual or your personal tax return. Accountable plans. This is a big one. If you are operating your sole proprietorship or your single member LLC, where you're filing anything related to your business on your personal tax return, it's pretty straightforward to take deductions for using your vehicle, for the home office deduction. But once you make that election to be taxed as an S corporation, your business is completely separate from you as an individual as far as reporting is required. And so your vehicle and your home, those are personal items that you are using for business. So you can't or shouldn't be reporting that directly on your tax return without some other steps in place. And one of those steps is an accountable plan. And that's an agreement between you and your business that states how you are going to reimburse yourself for certain personal expenses. Or say if you use your personal finance, your personal money, finances, personal credit card to cover expenses, if you're using your personal vehicle for business, and if you have a home office, and other types of reimbursements are covered in that accountable plan. Depending on who you're using for your tax advice, they may be able to give you a template to get started with your accountable plan, or you may want to reach out to an attorney just to make sure that everything is covered that needs to be covered. You will need to keep track of your business use. You need to keep track of your home office deductions and report. You actually have to file an expense report. Well, that's one way. File an expense report with your company so that you can be reimbursed for those expenses. So that's another thing that you want to keep in mind. So mileage, your home office, any supplies that you use that you cover personally, even some, well, I won't say that. We'll keep that medical covered in a different tax topic. So this is one way to make sure that you're capturing all of the or as many deductions as you can, and make sure that you are doing it right. So under that accountable plan, you'll get a reimbursement that is not taxed, and your company gets to take a deduction for those expenses because you were reimbursed for them. I think that's pretty much the basics of what I wanted to cover before I open up for questions. Again, you want to make sure that you are in compliance so that in the event of an audit, you have everything documented, and you're not at risk of breaking that corporate veil and potentially having your S corp election revoked. So don't see any questions. Let's see. No, I don't see any questions. If you have any questions about this topic, S corp compliance, any questions about your business tax situation, then drop those in the comments and I'll come back to answer those. Or you can send me a message. If you want to learn more about potential tax deductions or tax strategies that you might not be aware of. I do have a free training on that. You can, I think that link to that should be on my profile. If it's not, I will put it there so that you can check that out. And if you want to make sure that you're on track, for saving as much as you can before the end of 2024, because after the end of the year, there is very little that you can do. You only have a few more days left in this year, but we can take a look to see if there are any strategies that you can implement to potentially reduce your tax liability. If you have not made the election to be taxed as an S corporation and it's something that you have been wondering about, you can reach out to me. We can take a look to see if it makes sense and take the steps to get that taken care of before the end of the year, before you file your tax return. So thank you for joining me. We'll look out for next week's topic, and I'll see you on the timeline.